Hi there, this video you're watching right now is part of an ultimate investing series called UI Goes Deep. Before we dive, it is very important for me to bring out the following disclaimer. It will give me the assurance to safely do my work for you. Number 1. The deep dive video is not a stock recommendation. And number 2, not every stock will turn out to be a buy. If it is, that is a bonus. Number 3, opinions are my own. And number 4, I don't aim to be right, but I aim to be less wrong. What this means is that do not take this video at face value because I may not have necessarily captured all points. Please do your own due diligence. Alright, if you accept my disclaimer, let's begin. In this episode of UI Goes Deep, we continue to dive into the cloud industry. We are going to look into a company that is a part of the backbone of what we are able to do now with all our electronic devices. Without such a company, the internet we know of would not evolve from fast to faster and faster. Simple online activities such as browsing a website and watching a YouTube clip will take quite some time to load given how content heavy these media are. Can you imagine laggy live trade sessions with Ultimate Investing? And to the UI insiders, a slow UI bot to share potential trades. That's a bit exaggerating, but you get my point. In a way, we've kind of taken the fast-speed internet for granted. I'm guilty. Who is with me? So what this company does is important, and the company that UI will be sharing is Ciena. The reason why we are looking at this company is because 85% of the world's largest service provider are served by Ciena. They claimed top spot from 2018 to 2020 for the Optical Network Scorecard. In this report, it evaluates the top optical network equipment vendors based on criteria using concrete data and metrics. In 2018 and 2019, Ciena was number 1 ranking in market momentum and as the number 2 vendor in market presence, just behind Huawei. In 2019, it did 10% better than previous year in terms of the total combined score. And then last year, 2020, they were leading in all categories that were important to optical infrastructure. Sounds good. What exactly is their business? In this video, I break down their business into simpler, easier to understand chunks using everyday analogies so that you can decide for yourself if this is a business you now understand and want to invest. So, in short, Ciena makes your internet faster. But how? First, we got to understand what makes up the internet. There is a piece of the internet called the network, which is made up of your cables, switches, and routers. The network is what connects all the devices, and Ciena's role is to enhance the network to keep up with times. With the surge in internet usage boosted by the COVID-19 situation, and to also prepare for the 5G era, current network needs to adapt to keep up with the increased need for higher bandwidth. What if your network now is out of date or needs a lot of manual and laborious intervention to upgrade? Ciena helps you to transform your network into one that is dynamic and adaptable. They do it via 3 interconnecting structures, or the complete Ciena's portfolio called the Adaptive Network. Number 1. Software control and automation. As the name suggests, the objective is to automate repetitive tasks in a robust manner. It's like how we outsource the job of vacuuming the floor to an iRobot, thus saving the resources to do other tasks. Number 2. Analytics and intelligence. This part of the solution is for the machines to gather data, gain insights, and make decisions based on data. It is akin to the traffic light systems in Singapore. Our traffic system uses logic and algorithms to analyze real-time traffic data so that there is more green time for both motorists and pedestrians, depending on demand, and allow traffic signal faults to be rectified quickly. Number 3. Programmable infrastructure. This means that the underlying infrastructure has the intelligence and flexibility to expand and contract based on the network usage, Using the highway as an analogy to the network, in some countries, there are lanes dedicated for certain type of vehicles. And also, the type of vehicles, some can only carry X load through Y amount of distance. Imagine you are a travel agency planning a trip from Singapore to Thailand, and you are looking at minibus, which carries less packs per vehicle and can only travel a shorter distance because the engine is not built to go long distance. So you may have to arrange a transit somewhere to another vehicle and bring your passengers to the destination. However, if you chose a coach right at the start, then you can do more passengers and go further because the engine is built for it. This is what programmable infrastructure does. It can decide for you the type of vehicle that contains your data bits to take and which highway, the 400G, 600G or 800G to go onto, and which route to take you to your destination. Of the three, programmable infrastructure is the largest piece of their business, as you can see from their revenue breakdown, that more than a third of their sales come from the networking platform. Programmable infrastructure, as Ciena puts across, is their differentiating factor. Now, this is not to say that there are no competitors. There is Infinera, which is hot on the tails of Ciena. Currently, the 800G of transmission, which is the latest standard, can only be achieved by Ciena, Infinera, and Huawei. With US-China trade war, I will gently put Huawei out of the picture for now. Okay, what does 800G mean for the network? Greater capacity over per wavelength and more capacity over longer distances means you can send more data traffic across those cables. More is good. In addition to this greater capacity, 800G transmission brings the cost per bit lower. As previously highlighted, Ciena and Infinera are the only two companies out there achieving the 800G transmission. Comparing 800G performance across both companies, in terms of distance, Ciena's WaveLogic 5 can only achieve 800G speed across short distances, while Infinera's i6 achieved that speed over a distance of 950 kilometers in a test earlier this year. In fact, this is breaking industry record of 800G transmission. And then in terms of cost savings, Infinera claims i6 can generate savings of up to 25% for network operators against competing 800G products, thanks to its lower cost per bit, lower power consumption per bit, and higher fiber capacity. Those two are important criteria, but may not be the most telling. First, it does not mean that Ciena is falling behind in terms of 800G, as they are still a leader in this industry. Their technology can also lower cost per bit and also bring about higher fiber capacity, as seen in the trial with Verizon. More importantly, there are other interconnecting elements on why Ciena is the chosen one. Although Infinera can transmit over longer distances compared to Ciena's, but Windstream, an internet service provider offering digital TV, high-speed internet, and a phone in the US, tested Infinera's 800G nationwide, was impressed, but ends up adopting Ciena's solution. The reason is, as the Vice President of Architecture and Technology in Windstream, Art Nichols, points out, you also need the software layer that's capable of taking all that analytics at that layer for heterogeneous multi-vendor source solutions. And the carrier needs to be able to plan and operate and deploy all the services that enterprise customers want. It is also notable that Windstream is an existing customer of Ciena, using the automation software called Blue Planet to manage and automate different vendor services in one platform. What this means is that businesses are looking for velocity, consistency, and reliability. Most businesses could be utilizing multi-vendors who have their own gears to manage, and what they really hope to achieve is a one-stop control for all separate services to talk to each other. The Vice President was careful to underscore that Windstream wasn't just building a higher capacity network, but one that could make every other part of the existing business more efficient. These are the reasons published on why Ciena was the chosen one, and it implies some level of stickiness in the business, which is a moat for Ciena. Although competition is tight and 800G is in early stage, but the optical network trial is real. In a webinar presenting the industry subject experts, it talks about whether double the capacity brought about by the 800G technology equals to double the performance. Yes and no, because it depends on what type of performance you are talking about. Overall, 800G technology does improve the performance across. Deploying 800G also means more effective and flexible use of the 400G and 600G bandwidth, depending on usage as demonstrated in the highway analogy earlier on. It is a tunable capacity. Less usage utilize lower bandwidth and vice versa. Let's compare the overall portfolio for both. Ciena has the adaptive network and Infinera has Infinite network. When I do a comparison in terms of their offerings, I could not find in Infinera's product line for one that is similar to the programmable infrastructure of Ciena. And remember earlier on I mentioned that the programmable infrastructure is a key differentiator for Ciena. Based on this, I think Ciena has an edge in the optical network industry because they are one step ahead, but I could be under the wrong impression as well. So if anyone is familiar with this industry and has more insights, please leave your comments below for all to learn. According to Ciena, Ciena stands alone right now as the only vendor shipping 800G product. Not sampling, not trialing, but shipping real product for customer deployment. Ciena has shipped more than 1,000 coherent modems worldwide to over 30 customers who are in various stages of actively deploying WaveLogic 5 Extreme in their networks. The map below shows a visualization of the distribution of 800G modems across various regions, and we can see that these deployments aren't limited to one part of the world. And another important point to understand is that at least 1/3 of these networks are already carrying live traffic over Ciena's WaveLogic 5 Extreme. In terms of actual operations, it does seem like Ciena is already walking the talk. How does it fare in terms of numbers? Let's have a look. Some of the things we checked: increasing revenue, positive EPS, growing free cash flow, net margin more than 10%, ROE greater than 15%, and finally interest coverage more than 3 times, or debt equity less than 0.5. For the past 10 years, Ciena's revenue have been increasing year on year, and it was only last year that it decreased slightly. As for the earnings per share, it actually turned positive in 2015 and was getting better but took a hit in 2018. Since then, it has rebounded and stayed positive in 2019, plus a 44% increase in 2020. It is also notable that their net margin have been in the same trend like earnings per share, where it got impacted in 2018 but recovered in 2019 onwards, staying above our target of 10% in 2020. This could most likely be attributed to COVID-19, where there is a surge in demand for the internet, and that translated to better net margins for Ciena. In terms of returns on equity, it has also been on the rise since 2019 and is greater than 15% for the trailing 12 months. It is looking good for Ciena in terms of interest coverage of 15 times as well. At this point of time, numbers are healthy looking for Ciena. What I also like is that the debt to equity is less than 0.5, indicating a healthy debt level for the company. Finally, I also love companies that has positive free cash flow and an increasing one at that. Ciena has passed all criteria, but how is it in terms of valuation? Let's see. For valuation, we use price over earnings divided by growth. And for growth, we use EPS growth percentage in ultimate investing. However, you can see that the EPS percent growth value is not consistently available. As Ciena is a cyclical business, there are times when its earnings are great and there are times when it can underperform. Therefore, you do not get a very good picture of the earnings per share. So, I did my own calculation to see what is their year-on-year EPS growth. The range is quite wide and not easy to tell what is a comfortable number for Ciena over the next 5 to 10 years. If we take reference from analysts, it is estimated that the whole industry's growth is around 14% from 2017 to 2023. Looking at what Ciena has achieved, they have performed better than industry standard. And this is in line with Ciena's revenue, which has also outdone industry's average. With that as reference, and bearing in mind that the adoption of the Internet of Things and 5G is rising, I believe Ciena will be able to be part of the network explosion. Hence, I'm comfortable with allocating a growth of 30%, which Ciena has achieved in some of the years for the past 10 years. As such, with a P/E ratio of 23.4, Ciena is currently undervalued with a PEG of 0.8, and we want it to be less than 2, so that is great. I think Ciena is doing some really good things to keep its leadership position in the market. In terms of market share, they are still leading the pack. It is not easy for a customer to switch to another network infrastructure, like in the case of Windstream that we have discussed earlier on. They are an existing user of Ciena's automation software, Blue Planet, and I think that attributes a large part to the reason for choosing Ciena. With the future in mind, I have no qualms that Ciena will be around for the next 5 to 10 years. So instead of asking what will change in 10 years' time and will Ciena be able to thrive, I think a better question to ask is what will not change and can Ciena continue to give what the market wants? For me, what is definitely not going to change is that 10 years down the road, people will still seek faster, lower cost and expect more like how we do now. So whichever company can provide that will be the top few choices. Based on current standing and results, Ciena is poised to provide more, faster and at a lower cost. It seems to me that Infinera, the closest competitor, is also capable of playing catch-up to Ciena and is a strong competitor to keep an eye on. Based on current fundamentals, I'll go with Ciena as Infinera's financial numbers is not looking good for now. On top of that, Ciena is currently undervalued based on PEG less than 2. It does seem like a good time to own the stock. And there is also another way you can ride the trend with Ciena without owning the stocks. In Ultimate Investing, we equipped you with the knowledge to still ride on Ciena's potential upside without locking up your capital. That is true options. I am curious to know when is a good time to enter Ciena. Let's have a look at the chart of Ciena. Wow, it has been on an uptrend since around 2010. Can it continue to go up from 2021 onwards? I don't know, but I think yes, with the 5G and Internet of all things as tailwind. So let's zoom into near 2021 period. You can see that there is a recent pullback and now there is a what seems to me like a 20 cut 50, and this is a potential re-entry, what we term as a re-entry. So if we enter at this re-entry point, do watch out for the resistance line over here. Okay, at this point of entry, the risk to reward ratio might not be as good because there the price could get resisted. The risk to reward ratio is not that good. Or you could wait for the price to break out this resistance and wait for it to move towards the next resistance, which has a better risk to reward ratio. Let's see. So if we enter at somewhere near the breakout, assuming it's around here, and to the next resistance, we set our stop loss at around 5%. Now you can see the risk to reward ratio is better, and the ratio that we are looking for is at least 1.5. In this case, the risk to reward ratio is okay. There is still room for the price to move. So if you are doing trading, you can consider entering at this point. But let's say if you are thinking of holding the stock for long term, then this point is a good entry point and you can hold it for a longer time frame. Right. So that's all for the charting of Ciena. I hope you like it.